Right, good morning once again. We are welcome to this morning again for this live session. And what we do here is to analyze and see a positive trade opportunity. Right? Please, whatever analysis you get from here, do not take it as a financial advice. You can also checkmate your own analysis and make your financial decision. Likewise, if there's any place set up during the session, kindly put a proper risk management on your trade, right? So thank you for that. Now this morning, we will start with DSY. And I'm currently on the weekly time frame on DSY, and all we can see that the dollar is very bearish, but we are close to what we know as a demand place in the weekly demand right now. So on the weekly demand, let's see for the new month or for this week, if we could get something to us to give us the kind of relief from the dollar. But all indications from fundamentals and everything that's going on, we may likely to see more of a weakening dollar, right? We are going to see more of a weakening dollar. But the thing is, price will not just be going without pullback. Look at what happened here. We have this 1, 2, 3, 4 weeks of pullback before we have another sell-off. So, and when price is close to a very critical position like this, you will need to take caution of your aggressive trading that pair. So on weekly basis now, we are bearish. For now, we are entering into weekly demand. So the weekly demand, let's see this week, if we could see some maybe some upward in dollar that will give us at least the raise of some of these things. And if we continue to see, if this guy continue bearish and whatever that makes dollar to close below this weekly demand, then that will be looking for some of this area for bearish or continuation to bearish. So for me, although I will be more bearish on dollar, but if we are bearish, we also be taking on caution because of the kind of critical demand that we are currently in. So we'll just look for a way that we will not be caught up with if the price is about to continue bullish. So now you can see our trend line is still more of a track. Price is still trading below. And what you can see now is that we try to close above it, then we come down. And now we see that the trend line, the gap between the trend line, look at this touch here. There is a gap here. We have this touch, we have this touch, we have this touch. So any further going back may lead to a break that will lead to a continuation of this guy here. So we just caution and see if some momentum will be coming from the dollar. So currently we are in a very weekly demand. This is the weekly demand. We will be observing a bullish confirmation from this zone. We'll see a daily candle, maybe an engulfing candle around here, and a bullish engulfing candle that engulfed the previous bearish candle. So that will signal a break, a reversal, a temporary reversal for dollar. and you begin to see price closing above this trend line, then we have some of this liquidity, this trend line, this liquidity that price has created, that we could see some relief on dollar, and before a further breakdown. So, but where are we? What's our daily range on dollar now? Let's put this high now as our, because from that high that we have this kind of break of structure from that high. So we are, before we can confidently have confidence in bullish in dollar, we need price to close above this daily range, then that will turn to bullish. But as long we are still below this daily range, we are still more bearish on dollar. And even when we have, even though when we have price, whenever we have price, break out this trend line, break out from this trend line doesn't mean that we are totally bullish. So dollar can still push, then can still push something like this, then crack down. So we are we may still see more downward side for dollar, or more weakness for dollar. So if dollar is bearish for now, as we are speaking now, because we just now we'll be dealing with what the daily and weekly to be determine our trade. So last week, weekly, we end up bearish. That's weekly. Last week, we end up bearish for our weekly trade, and even on daily, we end up bearish. So we expect this today to continue bearish, and until we have a daily bullish evidence that gives us that, okay, for now, let's put hold on bearish, that maybe the bull are stepping on. So if we are looking at bearish there, so the next trade we need to look at. So on my list now, so we'll look at the GBP USD. So GBP USD, I will also love to look at it from weekly perspective. So what I can see now, guys, you can see that bullish price, what happening, that price has been trending. And where's our weekly rate, our weekly day range? So we have this, this is major structure. This is a major structure that gives birth to this high here, right? So we can see clearly that on weekly, we just break structure. Here we have a break of structure from weekly. So now that we have a break of structure from weekly, this guy has swept all liquidity, right? And here we have this a draw liquidity, buy side of draw liquidity that we just had last week. Price traded above that week. So this is overall structure of this range, but the weekly structure is this low now. So we have a weekly structure in this low. So what will be looking at now is between this high and this low. Here we have this, where we have weekly candle close. So last week close were bullish. This is very bullish. So this week we're still expecting bullish on dollar, on GP, on this GBP USD. Any pullback be a pullback for us, maybe to go long, then the price will continue, then cannot continue the up move. So for this week, I will be more positioned on buying the dollar. So now, so something is happening here. So this is a daily time frame. So daily, we are still bullish on daily. We are not bearish. I will tell you the reason. So the reason is, here we have, this is the last daily candle that closed. We have this daily candle that closed. This is the low, and this is where candle closed. So now we have this our daily range now. Our daily range is here between this high and this low. So I'm seeing a kind of relief, maybe to come to this So we have imbalance here. So we have two range that we'll be looking at to look for a buy opportunity this week. We have this imbalance here, and we have the demand below here. So if we want to engage in a sell, it will not be today. Though some people will be doing early sell right now, but I love to see a daily candle close like this. So this is now whatever I'm analyzing this trade now based on candlestick, individual candlestick formations, right? Not only on market structure. Because on market structure, we have a clear break of structure here, which gives us a break of structure. And if this guy is a break of structure and we have swept internal liquidity, so there's a need price come to discount. There's a need for price to come to discount then, so which is around this zone here for continuation to buy, right? So that is one level. So it's whether you wait for price to trade to discount and we look for a buy setup. So, but based on individual candlestick formation, we end up last week with bullish. To say, okay, for temporarily, GU is bearish, maybe to bearish to this zone. Then I would love to see this today candle so that is selling. If you see today bearish and close below, you want to see a daily bearish close, a very bearish candle close below this previous on Friday bullish. So when we see a bearish candle close, then we can, maybe by tomorrow, we can look for a pullback, engage in a short sell to where we'll be looking at for to continue bullish. So let's now move to 4 hours now. So on 4 hours, now we begin to see some relief on 4 hours. Now, this is where the chart will now make sense to us. So here now, clearly, we have our break of structure here. We have this break of structure, right? So we have our range, this from this low to this high. So put our Fibo level. So these are Fibo. So put our Fibo like this. So we are currently well in seller territory. So we need price to come to where a buy territory, then we look for a buy, since the overall trend is bullish. And now I spot out this demand area. This is HD 4-hour demand zone. So now I will have love, okay? So we have this now. We have this. We have this. So we need to see this. Maybe this low to be broken. Then we can engage. If we want to engage in a small sell, maybe set to some of this zone here. So we can see now that this was the daily line that I draw that I need to say daily candle close. So you can. So this is if you want to engage in a sell, which would be a kind of counter trade, because the trend of this pair instrument is bullish. So 2 things can happen: wait for price to make a pullback to discount and look for bullish evidence and we buy, or we can also engage in a sell. We can also engage in a sell and do a counter trade to this zone. So, but if you are doing a sell, there are 2 zones to watch. We have zone 1 that you must watch to. So watch this zone. We have this demand. But for me, I'm not seeing that this demand will go, because when you have 2 demands, it's better you take the extreme one. So We have demand 1, we have demand 2. So how do I know the one I should take? My feeble level will determine. Now, you can see that demand 1 is still on premium. Demand 1 is still on premium. So, and demand 2 is on discount. And if you are looking to buy, so it's better we take one, the trade from on discount. So the action we can see here, maybe there will be a reaction here, that will collapse this guy to some of this before we have this. So this is what we shall be looking out for on GU this week. On GU, we'll be looking at more of bullish on GU as we continue this pullback that we're expressing now. So I know what is happening now. Let the pullback come, then we can engage. So that is GU. So the next one is Euro USD. So Euro USD. So likewise, Euro USD is also in the same format. This is let's look at it from weekly. Now, weekly, so we have price. You can see how price are tagging into these zones. We have the support here. We have all the zone here. The price now is tapping into that zone, right? So this is a major zone that it can give us a pullback. Last week candle closed very bullish. This indicates that we are still more bullish on Euro USD. We have a higher drawn liquidity above here, which price could trade to, right? So, and last week, based on individual candle, last week is very bullish. Look at it. Look at where this one was bearish. We have 1, 2, 3 weeks bearish. Then after the bullish evidence again, when we have a bullish engulfing candle that engulfs this bearish, we have this guy as a pullback. Then we have 1, 2, 3, 4, 5. We have another 6. So look at this place. When we have this bullish evidence, then the market continued. So we only treat the market now more of individually candle formation, like especially weekly. So if the weekly end bearish, the next week we'll continue looking for a bearish. If the weekly end bullish, the next week we'll continue looking for bullish. So last week now end very strong bullish. So everything here is to wait for a pullback and to continue what? To get in, to go bullish on this Euro USD. So this is daily time frame now. Now this boss signifies that weekly formation. So inside this boss, I just did is just to bust out the opening and the close of the weekly candle and see how price trade into this boss. Then we engage in what? A continuation to bullish on Euro USD. You can see now that confirmed now we have a break of structure here, so which is very clear. So engagement, a pullback to these zones will now give us a trade idea that we are looking for. So which means we need price to come to where? To our discounts and look for trade on 4 hours now. So on 4 hours, these are 4-hour range. You can see all this purple zone is our daily, is a range that we are trading in on Euro USD. Euro USD here now. So they are analyzed by structure base. So we have a break of structure here. So there we have a break of structure, right? So all we need now is price to give us a kind of come to this one there. We now continue to look for bullish evidence on this guy. So these are our range. So you can see. Now, if you want to engage in a sell on this guy, there's a need to wait for maybe this low to be violated. So when you have this low, we have this low violated, the price there, you can do a counter sell from that zone to this zone. But for now, there's no information, there's nothing that is giving you to sell, for us to sell. Price create this high, create this low, create a higher high little. So it's just over. So as soon as price close below this low in 4 hours, then we can look for a sell opportunity from any FVG or other block and to sell to this zone. Takes about 200 pips thereabout, which is very good. Then from this zone, I will not look for buy opportunity. So there we become sell and to buy. But the major direction is to look for where? To look for a more buying opportunity because the market is very, very bullish. So that is GBPUSD analysis, EURUSD analysis. And the next one is gold, XAUUSD. So gold, I will also go to weekly. I also go to weekly time frame on gold. So weekly is, you are very, very bullish on weekly. And these are weekly range. They have this low. So let me delete this. Okay. Okay, weekly order block is here. So we have this low and this high. So what you can see, gold is like ranging inside this weekly zone. Now we have come to, you can see last, for now, as for me, based on individual candle formation, I will still more treat gold bearish than to bullish. Now, my reason is, number one, you are weekly time frame. These are weekly low and these are weekly high. And if we use our Fibonacci level, plug it from this weekly low to this weekly high, you can see that here we came to premium discount, we flip up. Now, there's tendencies that we still have this guy selling back to this, maybe 61.8 or to this demand zone. That is point number one. Then number two, based on individual candle, we just here now, I can confidently tell you that, look at this 3 weeks ago, we have a bullish candle. We have this bearish candle, but it could not, which we categorize as inside bar candle, could not close. So now I can tell you confidently that we have a successfully bearish candlestick that engulfed the previous bullish candle. So and when you see a bearish like this, it may tend to be lower. Now, unless we have another bullish candle, maybe this week, if this guy bullish again, engulf this thing back, just like what happened here. Look at it, we have this 1, 2. Then the next week, we have this candle that engulf this bullish candle. After that, you see any bearish candle that close below? No. The next thing you see a pullback to like discounts of this movement of this candle. Then from there, see how price trip off. Then look at this place again. We have a weekly sell. Then we have another engulfing bullish candle. The price never trip back to the low again. What do you see? We have price continue. So weekly, now we are having 2 weekly candle a bearish. So we'll just treat this market based on candle formation and based on range, trading range. Now let's look at what daily. So daily is doing some reactions here. Last week, I think we point out from this low, I think there's this low, yes, to this high. Then when we buy, we brought about 61.8 Fibonacci level, right? So you can see price at the 61.8 Fibonacci level. You can see how price tapping into that 61.8 and it's giving a reaction and it's buying. So if you are, but me, I don't do any buy because if I'm buying here, stop loss will come below, at least below this low, and which is too wide. So me, I like, because of the stop loss gap of gold, I like to entry from a smaller time frame so that to manage my entry. But in a nutshell, you see price reacted to that 61.8. Me, as for me, I don't love to use 61.8 for my feeble level again. I love to use extreme feeble level like 71 or 75. So, and when you look at it, look at this low here, look at this touch here. So, these are trend line. This is another way that this guy can also resume this bullish that we have seen. So, we have this touch here, first touch, we have second touch, third touch, price close yesterday or Friday with bearish. Now, today we have seen how price sweep away the liquidity below Friday. So there's tendencies that since the liquidity below Friday have been swept, so this can also give birth to a higher push up on gold. That is another critical way that, okay, we could see between today and tomorrow the kind of bullish on gold. Number one, gold is reacting for 61.8 feeble from this swing low to this swing high, and also it's bouncing from this trend line that connects this we call it diagonal trend line that connects these two lows. You can see. So 4 hours will not tell you the whole directions where you need to go. So on 4 hours, are we totally bullish? No. On 4 hours now, we can still expect a bearish reaction. So we have a break of structure from this. We have a break of structure here. Now here is our, so we have this, our swing high for our swing high. We have this low. So we expect price will trade into this little gap here, but expect a sell. I'm not expecting this guy who is just bullish now, will just be bullish, no. So maybe something like this nature, price can come back again, then we'll test this trend line before we have a proper bounce. So for me, I will be looking for a sell since that 61.8 will be the best place to join the buy. By now, it will be a very good money. Now, price as it is not ideal to just join price from this high. Now, name of is buying. Don't forget, we have this imbalance that is here. So, and gold do respect imbalance so much. So, imbalance, and we have another this little gap, little liquidity void there. I wanted to just point out all liquidity void that on this session, on this trade. So we have this void there. So we may have price push to this zone, anything from this imbalance to this zone, then we have it a pullback, then will not give us a proper one push up that will come and cover this gap. So in two ways now, based on my view, the way it is now, let's go to, so we have seen what a bullish engulfing candle that engulfed these 4 hours, and the sequence of trading engulfing candle is that I just put the head of the engulfing candle like this, so something like this. So there's tendencies that maybe anywhere, I don't know where this guy can go to, maybe pull back to this, then we cannot have that push up. You know, there's this imbalance here that price have met. So this is my view, both from weekly, daily, and 4 hours time frame. So I would like Mr. Jerry to contribute regard to this. Then maybe 1 or 2 persons can share their view regarding to what are you seeing on gold, Mr. Femi, what are you seeing on gold, Mr. Jerry, anyone. So please make your contributions regard to this.
Yeah, thank you. Thank you, Valentine. Well done. Good morning, everyone. Beautiful morning to everyone. Like as usual, we don't. You've rightly said that markets may push up to that zone where you have the imbalance on the bearish, long bearish candle. Yes, but from what I'm seeing currently on today, price is already pulling back because you are this particular time frame is
For
the
our,
daily
for
4 hours. Okay, so price already pulling back. So that pullback you are seeing on that candle could be the resumption of a pullback that could come to test this that zone. So what we'll do basically is we can just plot our Fibonacci from the low, from that low, yes, take it to that high where it is, and then mark 50. 50 is coinciding with that
yes,
edge, yes.
yes,
So
yes.
that zone. So if he pulls back into that zone, that could be a place where we could join again to push the buy, to push price back up.
Okay. Yeah, that
But
makes
but
sense.
you need to also remember that last week price made a nice push down. So the part that was taken out, that place you have your FFG, the big
Yeah,
gap. Yes, that zone. Yes. Price could create a liquidity there and then push up to take out the liquidity before we now have a massive drop. So how do we see this properly? Go back to daily charts.
this on daily sir.
Yeah, so what we do basically, since this push of last week had taken out, you can see took out, there's this prime low on
This,
your left. Yes.
yeah,
No, 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 no. The one at the up, the one at the top, the one at the top. Yes. You took out that prime low and then took out the 3 days low of last week.
this one.
Yes, yes. So we could have price push up to the 61.8 of that swing. You know where the swing started from? No, 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 no. You can plot it from there as well. Plot it from the top, from the top. Let's plot 5 minutes from the top. Take it to the low. Good. Uh, where do we have you see
Add
the
that,
gap between 50 and
yeah,
61.8?
that.
Please extend that your yellow, let it cover 61.8 and 50. 61.8 and 50. Yes, don't like that. That's where we have a gap. And then this is going to be a major zone. So those who want to sell could watch out to sell here. The probability that price is going to drop from there is going to be high. How long it's going to drop, we may not know, but the price is definitely going to drop from there. The same thing where we are, the buy that we marked. So if price pushed down to where we marked earlier on the lower time frame, we could join the buy and push price up to that zone, back to that zone. So we begin to look at it as it develops. Yes. So begin to look at it as it develops. Then so you can see that candle, there's a candle, one small reddish candle in between the swing, the bullish swing that just, yes, that place could create a liquidity for price.
Mm.
We'll be having a lot of people putting their stop losses at that bottom. Price could just push down, take out those liquidity, tap into that zone where you just plotted, tap into that zone, and then move from there back up. So for me, that's the area where I'll be looking at taking my buy. Once I see um, a push of the liquidity, you know. Yes. Yeah. So the 50% zone where you have that orange stuff area is where we'll be looking at taking a buy. So one good thing about gold is that gold respects some of these institutional
Reference.
references, you know. A lot of people look at this 21.10 and 50% level. So when these levels coincides with FFG zones, other block zones, these zones are always giving us high probability moves. So, in trading, we are always looking for areas where we can take trade with very low risk, but high probability that price will going to swing into our expected direction. So that's what we do. So from what we have here, these are the areas we are looking at, having price moving into the direction we expect. So please pay attention for the week. This first place is where we just mapped, where you have the bullish, the 50% level as a result of this current bullish move on the 4 hours. And then the second place is the upper zone where we expect price to go test, and then we can have a sell down from there. Begin to look at it and see how price develop or fare. So that's it for me for gold.
Ah.
And then can you go back to Euro USD? You were